Let's be honest, that heart-stopping roller coaster volatility in the crypto market, what if I told you that's not a bug? What if that's actually the main feature? That all that chaos is really the key to unlocking some massive opportunities. Well, today, we're going to break down how you can not just survive crypto volatility, but actually learn to master it.
You know these two feelings. We've all been there. On one side, you have that intoxicating rush of a bull market, right? Everything's green, and you feel like an absolute genius. But on the other side, you've got that gut-wrenching dread of a crash, just a sea of red, and it feels like the floor has completely vanished. These aren't just market trends. They are powerful, powerful emotional forces that can literally make or break you.
And this quote it nails it. Anyone can look like an investing pro when the market's only going up. But the real test, the thing that separates the seasoned players from the crowd, is how you act when things get scary. That's where the real work is done. That's how you protect what you have and set yourself up for the next big run.
Okay, so let's pull back the curtain on the psychology of all this. You ever feel like the market is just, playing with your emotions? Well, there's a reason for that. There's a very predictable cycle that traps most new investors, and just understanding it is the first step to breaking free.
Now, this is where it gets really fascinating. This cycle shows how our feelings are basically a terrible guide to what we should be doing. It starts with optimism, which feels good. That builds to thrill, which feels even better. And then you hit euphoria. And look at that note, peak, financial risk. This is the exact moment most people feel the safest and FOMO all in. And then, of course, the market turns. Anxiety creeps in, then fear, leading to full-blown capitulation, panic selling right at the bottom. And here's the crazy part. That moment of maximum fear is also the moment of maximum financial opportunity. Amateurs literally buy at the top and sell at the bottom. They do the exact opposite of a winning strategy.
So, now that we get the emotional why, let's talk about the structural what. See, these emotional waves aren't random. They create these distinct, recognizable phases in the market. Knowing this structure helps you zoom out and see the bigger picture, beyond all the daily noise.
Pretty much every market cycle follows this pattern. It kicks off with accumulation. This is when the smart money is quietly buying things up while everyone else is still scared or bored. Then comes the markup. That's the exciting bull run we all know and love. At the peak of all that excitement is the distribution phase. This is where that same smart money starts selling to the euphoric crowd. And finally, the decline begins. The bear market takes over, and eventually we circle right back to a new accumulation phase.
And this slide just lays it out, plain and simple. You've got two teams playing this game. Smart money acts against the grain. They buy when there's blood in the streets, and they sell into the hype. The herd does the exact opposite, driven by FOMO to buy high and then by panic to sell low. So the question you really got to ask yourself is, which one are you?
All right, so how do you break out of that cycle? How do you start acting like a pro? It all comes down to one simple, incredibly powerful rule. And it's not about finding the next 100x gem. It's about something much more fundamental: survival.
That's it. So simple, it's almost funny, but it's the most profound principle in all of investing. The number one rule isn't about making money. It's about not losing it. Why? Because you can't win the game if you're not in it. You have no chance of catching the next bull run if your capital got totally wiped out in the last bear market.
And this idea has a name: capital preservation. This is the bedrock, the absolute foundation of every single professional strategy. Think of it like defending a castle. Your first job is to protect the walls, to protect what you have. It's a defensive mindset, and it's what lets you stay in the game long enough to actually win.
Okay, so theory is great, but how do we actually put capital preservation into practice? Let's get into the nuts and bolts of how pros structure their portfolios, not just to survive the chaos, but to be ready to thrive when the time is right.
A really common professional strategy is the bucket approach. Think about it like this. The biggest chunk of your portfolio, maybe 60%, is in the blue chips. Your Bitcoin, your Ethereum, these are your anchors. Then about 30% goes into mid-caps. These are promising projects with more growth potential, but also more risk. And then a small, manageable slice, maybe just 10%, is set aside for those super speculative bets, the high-risk, high-reward moonshots. This structure means that if one of your risky bets goes to zero, it doesn't sink your whole ship.
And here is the pro's secret weapon: stablecoins. These are cryptos pegged to something like the US dollar, and they are so much more than just a place to park cash. During a downturn, they are your safe haven. They give you dry powder, cash on the side, so you can buy the dips when everyone else is panic selling. And get this, in many cases, you can even earn yield on them while you wait. It's like getting paid to be patient and smart.
But let's be crystal clear about something. All the strategies, all the portfolio buckets, all the tools in the world, they're useless if your head isn't in the right place. The final, and honestly the most important piece of the puzzle is mastering the professional mindset. This is where the real work happens.
This is the fundamental shift you have to make. When you treat crypto investing like a business, everything changes. You create a plan. You manage your money like it's your company's lifeblood. You do your research. You basically become the CEO of your own investment firm. And most importantly, you take impulsive, emotional decisions right out of the equation.
You know, even the famous term HODL gets a professional upgrade. For a pro, it's not a meme. It's not just blindly hoping and holding on for dear life. It's an active, long-term strategy. It's based on deep, fundamental conviction in what you own because you've done the work. It's the patience to hold through the storm because your research, not your fear, is telling you to. It's conviction, not hope.
So it really all comes down to this. Your greatest shield against the chaos of the market is a written plan that you follow with unwavering discipline. That's it. That's how you master your own fear and greed. That's how you separate your long-term goals from all the short-term noise. In a world of chaos, discipline is your superpower.
Ultimately, it's all about perspective. The amateur sees all this volatility as a scary threat. The professional sees that same volatility as a source of opportunity, a chance to buy great assets at a discount from people who are panicking. The market's wild nature isn't going to change, but your reaction to it can. So I'll leave you with this. How will you choose to see it?